Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Gina Martin-Adams sitting in today for Taylor Riggs. We're counting you down to the closing bell. And here to help take us beyond the bell, it's our global simulcast partners, Carol Massar, who we love, Tim Stenovec, who we love even more, bringing together our Bloomberg Television, radio, and YouTube audiences to parse the crucial moments of the trading day and the week, Carol. And Carol, right now, we should point out for all of our viewers and listeners right now, we are basically around the highs of the day and the highs of the week, for that matter, on U.S. equities.
After some wild swings, Victoria Green of G Squared Private Wealth was just on with us, and she was just saying with the NASDAQ peak to trough over the last 2 days, you're talking about a more than 1,000-point swing. So it's amazing to see kind of where we are heading into a weekend.
So was yesterday the bottom for this current cycle? That's the question I think a lot of investors are asking
themselves.
I don't know.
You need to ask Gina that. Gina, was that the bottom?
I don't know. Gina Martin-Adams would know.
Yeah, put me on the spot. Thanks so much.
Sorry.
I do think that we made the low of consequence this week. Can I say it's the ultimate low? I think the technicals are too weak to really get a whole lot of confidence out of. But we did see a lot of value unlocked in U.S. stocks, and I do think that investors are going to dip into stocks when you see these dips all year, reflecting an outlook for growth to kind of hold in there over the longer term.
She loved you a little bit less for that particular throwing her on the spot there, Tim. But it is notable. Well, every now and then we've been forced to go to the immediate and then back to the fundamentals. And I think at the moment, while we see commodities pull back on the day, we're still so worried about the inflationary impact in the longer term.
Yeah, and we should point out, we talk about the wild swings. You mentioned it there, Carol, for the S&P 500, and you look at from peak to trough here, this is basically going to be the biggest trading range that we've seen going back to basically some of those pandemic-related sell-offs. The NASDAQ, not quite going back that far, but still kind of one of the wildest weeks that we've seen. It looks like going back to close to the beginning of 2021. The Dow Jones Industrial Average going to finish the day up 2.5%, or about 834 points. The S&P 500 up 96 points, or 2.24%. And the NASDAQ composite going to finish higher by about 1.6%. The Russell 2000 also getting in on the action, not sitting this one out. It's higher here right now on the day. Let me just check, by 2.25% here. And we should point out that for all of these indices right now, they're all in the green here on a weekly basis, with the exception here of the Dow, which is basically flat, unchanged on the week.
Which is pretty amazing considering the week that we've had, and it was a shortened trading week because of the holiday. I'm just going to say I love you all equally, and there was a lot of love going on around Wall Street, and that included the KBW Bank Index. It was up almost 4%. Did you guys see that? I mean, pick your big bank, Citi, JP Morgan, Morgan Stanley. Maybe as rates went up a little bit, we saw investors feeling pretty comfortable moving money into it.
I think we saw the sector performance at the industry level in particular was really compelling today, because I think there was one notable missing component, and that was energy. If you look at the components of gainers, household and personal products, food, beverage, and tobacco, these are groups that tend to benefit most when energy prices are falling, not staying high. So some of this is an unwind of expectations for oil prices to escalate with the European crisis, with the invasion of Ukraine. On top of that, you have some of the more traditional players on value continuing to lead, which would say we're just going back to the trade that we had pre-Ukraine for the most part. Value leading, while growth continues to bring up the rear, with software and services down there at the bottom of the list.
I was just going to say, Gina, don't be too worried about energy, because it's still the best performing major industry group in the S&P. I think it's up something like 23% so far this year. So really an outperformance. As for other gainers today, Etsy, it's not just about macrame vests or flowers for lapels.
Oh, yeah. I use Etsy all the time, by the way. I think Etsy's great.
I think Etsy's great too, and it's really expanded. It's not like what you originally thought of it. Top of the
it's
S&P.
For men now, Carol. Men too.
For everyone.
Yeah, manly.
They love everyone. It's up 16% here at the close. I know you mentioned it earlier, Romaine. Top of the S&P 500. Reported late yesterday, it did get lost in all of the geopolitical concerns here, and rightfully so. But nonetheless, soaring as results point to revenue growth ahead. Dish, also an outperformer, up about 11%, pretty much closing at its best levels of the day. JP Morgan upgrading it 2 notches to overweight from underweight. They see a bunch of near-term catalysts. And App Harvest, I'm going to do a little bit of a tease for us, because we're going to talk
to App Harvest, what's that?
So
you stump me. You rarely stump me. I don't know what this company is.
What? Mark this day on the calendar. They do vertical farming, and they are trying to figure out how to do it and do it locally. Really fascinating.
Romaine, if you're not busy over the next hour, we're interviewing the CEO.
Come join us.
Okay, I may stop by the fishbowl in a second.
Okay, and you come pick lettuce with us as well. They did report earnings. They did trail, and sales, though, did top estimates for the quarter. So we're going to talk with the company, get a little bit into the outlook. All right, Tim, what do you got?
All right, I got some decliners for you. Romaine, you talked about Moderna, ticker mRNA, earlier in the day. Finishing the day down today by about 3.1%. It was the worst performer on a points basis in the S&P, on a percentage basis, in the S&P 500. This coming one day after the company did report earnings. And hey, the share buybacks that they announced yesterday certainly helped send the stock higher yesterday by more than 15%. So a little bit of selling today. Dell Technologies finishing the day down by more than 7%, tumbling after the hardware maker gave a disappointing profit forecast. Also reported quarterly earnings that fell short of expectations. The company also saying that component shortages are going to prevent it from meeting demand for products, supply chain constraints, raising the cost of shipping and logistics. Particularly not a big surprise there. We've been hearing a lot about that from hardware makers. Foot Locker having its worst day ever, finishing the day down by 30%. The company gave a disappointing outlook as Nike, the company's biggest supplier, cuts back on business.
I thought that was interesting because, I mean, the CEO talked about how they were going to try to broaden out their selection. But aren't all of the companies, these branded companies, the Nikes, the Adidases of the world, they're moving more to just selling directly on their own website?
There it is. Yeah, and if you remove that middleman, then what happens to that middleman? Foot Locker is one of those middle people.
And what's Foot Locker going to do on the metaverse?
Yeah, I don't know. I haven't been to the Foot Locker or the metaverse.
I thought you were going to say you haven't been to the metaverse of late as well.
I haven't. I've been a little bit in the metaverse the last couple of weeks.
I can definitely see you with a VR headset.
That's where he's been, actually.
Yes. He's not been with his family at all. He's just been taking some time out playing ping pong on the metaverse. Meanwhile, I'm looking at that's what my husband does. I'm looking at what's happening in terms of cross-asset moves. And this is another extraordinary day because actually oil is higher on the week at the moment. We are still lower compared to the $100 that we managed to hit at one point yesterday. But at the moment, we are seeing the likes of WTI crude at $92. It started the week at about 90, so still elevated. And I think the fact that we are pulling back, why? Are we just suddenly pinning hopes on the fact that Russia and Ukraine might come to some sort of negotiating table? Still, it doesn't feel as though they're actually headed or destined that direction, but still the market wants to bake in some optimism here. So oil pulls back that little bit. We're seeing overall, though, interestingly, the foreign exchange story not reflecting that oil is on the downside, because actually in the Norwegian krone, the Canadian dollar, those two currency pairs very pegged to the oil are actually in the green versus the US dollar. But this is finally as the US dollar pairs back a little bit and we see some of the more beaten up areas gain a little bit of life. We're also seeing the Aussie dollar, for example, which had been hammered somewhat up 0.9%, as it should be after the amount of inflation that we've seen across commodities, and Aussie really related to where metals go. And still we're anticipating plenty of inflationary pressures there as we worry about ongoing commodity supply chain issues coming from Russia and Ukraine. And we look at sovereign bonds, which actually after yesterday, the flight to safety that we saw across the world today pared back some of those gains. So we saw yields per share in Switzerland, in Norway, in Japan. And also it seems as though we see those moves in the US as well, Romaine.
Yeah, you talk about the yields, and these kind of roller coaster weeks are always interesting because if you had went to bed on Friday night a week ago and then just woke up today and fired up your Bloomberg terminal, you really wouldn't think that a whole lot had happened here. The move that we saw lower here in the 10-year yield earlier in the week, taking us down to 184, that's been pretty much unwound. 196.52 is where we're going to basically end the day today on the 10-year yield. That's higher than where we were a week ago. Similar story for your 2, your 5, and your 30-year yields, as a lot of people now start to maybe pull back on some of those haven trades and now start to look a little bit maybe ahead to what the Fed and the central banks around the world are going to do.
Yeah, I've got to say, I'm pretty surprised that the market held in as well as it did into the close, considering how much risk is out there going into the weekend with Ukraine and Russia still, with further sanctions potentially, with this ongoing risk. Should be dominating, but it's not. And I think that's a function of the fact that liquidity is still sloshing around this world like crazy. The Fed is still doing QE, for goodness sakes. And investors have to put their money somewhere. They're not particular. The bond market doesn't look so appealing in an environment where inflation is still predominant. So stocks get the benefit of the doubt. U.S. stocks get bigger benefit of the doubt in an environment of global risk.
No, it's a really important point. I agree with you, Gina. I really thought, oh, God, heading into the weekend, we're going to see a little bit of selling, and we didn't see that. What's interesting thing is, we wonder, the focus next week, we've got a big batch of economic news, including that monthly jobs report, Tim, and that's going to be front and center. We're going to think again, where's the U.S. economy?
Yeah, 400K is the number that economists surveyed by Bloomberg are expecting right now. Is it going to be an upside surprise, a downside surprise, or
That's going to be huge if we get 400K. Because remember, the January number was also a huge surprise to the upside. So if we have two back-to-back months like that in that 400 range.
And then what does the Fed do in response, or how does that change the policymakers' thinking, right?
Yeah, and don't forget, we hear from Powell on Wednesday and Thursday, I believe, on Capitol Hill.
I mean, I think what's been interesting, we perhaps haven't talked about it enough, Romaine, and we keep bringing it up, M&A, whether it's on, whether it's off again. And of course, Gina, you were talking about the liquidity still sloshing around. Yeah. Chevron, we understand, now said to be near a $3 billion deal for renewable energy group, so a deal there. But then M&A coming off the table as well. We're just seeing that Zendesk, that deal not happening anymore as well. So we are seeing the on-again, off-again movements, Momentive announcing a termination of the Zendesk transaction. A lot of regulatory heat whenever we are seeing M&A deals being made.
I think it's also notable that these, traditional big integrated energy companies constantly and increasingly looking at renewable, and especially against our geopolitical tensions right now and watching the energy markets. Guys, what a week. Have a great weekend. We're thinking about the people in Ukraine. And of course, we're going to be continuing our coverage certainly into next week. That's going to do it for our cross-platform coverage. It is called Beyond the Bell, live on radio, on TV, and on YouTube. We will see you again, same time, same place, Monday.